Hey, what's going on, guys? It's Will. Hopefully, you're having a good one. Thanks for tuning in here on Wednesday night. We're going to jump into the markets, taking a look at AI stocks, as well as some data center companies. And we're going to be jumping right in here. Thanks so much for tuning in, Tyler. So I appreciate you all. We are launching it off. I think we should be live at this moment. And can you guys hear me and see me okay? Good to go. All right. So hope everyone's having a good day here on Wednesday as we wrapped up the market. A little bit of a correction in some of the markets, and then we see some green after hours. We did get into a slight position against quantum today, despite having some positions that are up significantly. Recently, we decided market of quantum potentially could be facing some correction, so we ended up getting into a trade. Not the best entry there on IONZ, but you can see it hasn't moved much today. We were up a little bit at one point, but we're down about 65 bucks, looking for a potential recovery of about 10 to 20% on the inverse of IONQ. So we were trading that quantum stock. We went over that today. Wanted to start it off with some AI plays. Hey, Biggie, what's going on? What's going on, Tyler? And the blob is here. Gazeev, what's going on? Redwire. In the green. Comment the word green if you're in the green. Mr. Mose says, yes, sir. Good to see you here. How's everything going? So we're going to jump into some AI companies today. We're also going to do a quick look at APLD is going to be the main focus here first into today. Mr. Mose, thanks for tuning in. Gene Burned. Ah, man, you guys are super nice. I see everybody like the man, the myth, the legend, you're saying. And then Gene's like, my favorite time, Will time. I appreciate you guys. I really do. My favorite time here is the investor time. Getting some outlooks from you guys, some insights from you guys. Thanks for tuning in. So the first stock that we're going to cover, if we go over to our data center watch list, all right, that's going to be APLD stock. And we've been covering this one for a while. All right, we've been following the stock to all-time highs. And we're about to jump into it for Jose. Okay, we're going to jump into it. We're going to jump into it as we do have long-term positions here. Okay, and then Anna says, I'm curious to hear your opinion on NioCorp, NB, looking for small market cap companies, mining specifically. Okay, and they have magnetics for robotics. I like magnetic stuff. We could go into it in just a second. Dennis, what's going on, Dennis? What do you think of IONQ is definitely the leader in quantum long-term? If IBM is claiming to have more over $1 billion in quantum revenue. Yeah, IBM, probably the leader. But it's just such a small portion of their greater business that you're not investing directly in quantum. When you buy IBM, you're buying a lot of other things. It's kind of like if you wanted to invest in Waymo, because you see the self-driving cars. I was just on a call with an investor client today, and we were talking about some of the robotic sectors, and she was saying, I'd like to be able to invest in Waymo, but Google owns them, so I can only invest in them and then invest in Google, and then a small portion of Google owns Waymo, and maybe that makes up some of the gains. And we're like, but Google's a good company. But the same thing's true with quantum over on IBM, right? If you're wanting to invest in quantum true plays, then looking at IonQ and these other plays or Rigetti, those are going to be more solid for a true play in quantum and not other sectors that the company is in. Yeah, so hopefully that helps with answering that question, Dennis. It just kind of depends, right? Marty says, anyone here about the no pattern day trading rule? Yeah, of course. Is that thing getting is that going away? Is that rule going away? I heard that might happen. Elvis says, what do you think of BBAI pullback today? So we're going to jump into it. First one, we got APLD. So APLD, we see them on this consistent uptrend over the last few months. We really particularly focusing on them here since about $3 a share, this uptrend, this reversal, but really a continuation of their market cap has been building here. And we see them get up into $25 a share. $25 a share, and they were just at like $3 a share earlier in April. So end of market kind of sell-offs. We saw them rally here and then make all-time highs recently. So APLD is building the data centers for big tech right now. And if we kind of open up what's going on with APLD right now, they are specifically focused on the strategic placement of data centers. So as somebody that personally, I was just talking with our developer, Ryan, who I work with pretty often on putting together, and we're constantly finding new ways to innovate over here in Mercatus, which is our predictive analytics software. And Ryan's a tremendous developer. He goes and he helps us get the data sources and all the new things that we're looking to add, like institutional trading. But one thing that we do is we have like the AI models that we're using. So if I wanted to search, let's do APLD, it takes a little bit. If we do, let's say OpenAI or Grok, let's do a Grok analysis, and I search it up, and it's now doing the analysis. Now you can notice it takes a while because it's doing all of the AI. It's taking all the press releases we give it, all of the institutional holdings, all the data that we feed the models from our own sources that we go and source, that otherwise the models, if you use them on their own, they don't use those sources. We're taking those and we're bringing it to it, but it still takes a long time. And so we've thought about doing our own mini data centers and things for our company, things like that. And the reason why is because it could be a lot more effective financially when you're at scale. So you can see some of the projections for APLD are fairly bullish, projecting up to 6 months out about a 10% potential gain and continuation for APLD. And you might say, why is that? What's with this future price looking so bullish, right? Well, they're building AI data centers and the constructions for those data centers. So they make sure that they bring forth the fastest building strategies for constructing them, but they also make sure they bring forward liquid cooling, energy sources for renewable energy, building them in cold places. And so the reason I tell that story about our app is because, like, when I'm thinking about building it, I'm not thinking about building a data center or anything like that here, like a tiny data. I'm talking about a mini data center in California, because California, the energy is expensive. Maybe if I go by Folsom Dam or I go somewhere where you get some hydroelectric, maybe it can work, right? But overall, like, the scale is so much greater in other places. So that's why you see companies building in cold places with easy power. A good example with Applied Digital is they're going to places with like wind turbines or solar. So bringing the workloads directly to the point of generation, and going to places with NVIDIA and Dell and Intel and Hewlett Packard and building these data centers in cold places like North Dakota. And so they recently signed that 15-year lease, and then we see their market cap get up into about 6.3 billion as a result of them being in this data center market. So if they signed an $11 billion deal, and they're actually greater than that, their market cap is still pretty low at 6 billion. So they could continue up. Now, the risk is that even though they've signed those deals, it hasn't really showed up in their balance or their income statements or their balance sheets at this time. You do see 1.9 billion in assets, but not really seeing the reflection of that recent deal. But institutional holdings are increasing over on APLD. We see more increased positions. So big banks are buying this stock. And you might say, why is that? Well, with the deals that they're in, the market cap that they're seeing right now, they do have the potential long-term to be a top provider for building those data centers. So I think that's where we're at with the reasoning. Then you have them start to pull back from about $27 recently. That was 2 days ago, down to $23.70. And they're starting to, obviously they've broken out of this trend. So they've finally broken out of of this consistent uptrend they've had since April. Okay, so you can kind of see that trend there. And now that they've broken out, they are stair-stepping up. And as they stair-step up and now are in a hyper bullish trend, you can see that they have this level here holding above this green line, that moving average. And then they have a resistance level, and this is kind of their new trend here, where they're looking to continue. So they do have a support that they've established yesterday and into today at about $23 a share. And so they're going to look to hold around 23, okay? And they're looking to recover or continue their uptrend, you could say, up into about $25 to $27, 10 to 15% potential margin for profit. Now, if they don't hold this level, which it's possible they do sell down, the next level of support would be right here at $20 a share. That was their last level of resistance right here that we saw them establish about 2 weeks ago. And that would be the level to watch if they can't hold that $23 price point. Okay, so that's how APLD looks. We are looking at them now. We've seen a pullback in the market last day, 2 days here to see if they could continue. But we do got to watch that $23 price point, see if they can continue to hold. So how is everybody doing so far? So we got a few things we're focused on. We're going to jump into BBAI. Generally, though, just APLD, why we're bullish on them, data center infrastructure and top big AI tech companies choosing to select them as a company that builds their data centers. That's why we see them go up. Short term, they're up to all-time highs. There's more volatility right now. Long term, they look great. Short term, you just got to have a plan the same way you have a plan for the long term. And that is the key. So Jim Jam is here. What's going on, Jim Jam? I got your message earlier today. I think, did you double your account? I think you were up 100%. Amazing. So Jim is in Stockmates, and he just sent me an email that he has doubled his account. That is absolutely beautiful. Anna says, American Rare Earths. Okay. So Anna, you got 2 mineral companies there to check out. We're going to jump into BigBear.ai, and then we can have a look there at those mineral companies. Now, when it comes to some of the other comments, you got Marty here is looking at CTM. CTM is going up. They were up today. They had some run ups to $1.25. That company's really growing in market cap. We've seen them get some momentum recently after some agentic AI contracts with the government, and they're still at $100 million market cap. So looks like they corrected after hours a little bit, back down to $1.21, but they've seen some momentum for sure. Then you got, let's see, Thomas, BBAI had a healthy pullback. All right, we'll take a look, Thomas. Thanks for tuning in. Short-term position on Redwire there, says Seed. What's going on? Thanks for tuning in. All right, thoughts on the risk? We could take a look at that. Marty says APLD short-term plan is going along if it goes down. Got it. Yep, I could see that. Yeah, looking for that correction, maybe not holding that $23 range. Seeing that sell down back into that $20 range. Could see that potentially. All right, and then let's see what we got. DC is here, picked up some Redwire, bullish long-term. Nice. What's going on, Robin? Doing well. Doing well today, man. I am doing well. And Crazy Carl, INTT, breaking out of downtrend. All right, Carl, thanks. Robin, long-term is always the best plan on CTM and LES. Love that. And then Jose says, good evening, Redwire. All right. So we got some demand for 2 stocks right now. It's going to be BBAI analysis. And I'm going to pull that up as well over on OpenAI. Want to get a full analysis, BBAI. And then let's also jump in. Here we are. Okay. So we were watching yesterday and we said they're pulling up to that $8.50 range. They're going to be at a resistance here. We do see them kind of sell back down. The nearest support level is at $7.20. So we didn't see them reach those levels today, but that is where that moving average is at. That's where we could see them pull down in the near term, as they have made a tremendous run up to $8. What we'd like to see is a healthy pullback, continuation in the trend they're going, because Big Bear, notoriously, when we've looked at the history of what they've done, a lot of times, when they've made these big runs up into $8 a share, a lot of times they've corrected pretty quickly back down to $6 or back to, really down to $6. So you do got to watch out that something like that, we see a couple red candlesticks on the last 16 hours, here after some serious green, that they do hold that $7.20 price point. And potentially we could see them continue up, but they do have that level where they have bounced down to $6 before at this level. Now we have seen them also make runs. Last time they had some volatility around this $8.50 range. They dropped back down to around $6 and then continued back up to $10.50. So that could be where we see them go. Couple things to note around their recent movements. A little bit of a different run this time. They're getting closer to big events like the World Cup, which is definitely a big deal. So with their very scan tech that we've seen at the airports at least, and that we've seen it scan at LAX, Denver International Airport, JFK, all those airports, and also not only at TSA, they're going directly to the airlines, which I think is actually a really unique and smart move, is that they've come out with new expansions outside of just the very scan tech. So while they've looked to expand in the airports, because their CEO is previously Commissioner of U.S. Customs and Border Protection and Acting Secretary of U.S. Department of Homeland Security, I think there's more of a focus on the CEO side, actually, of looking for other opportunities outside of the very scan. In this case, what they announced this past week was that they're moving heavier into, well, they did have an article on Nashville International Airport, they're there, but that they're moving heavier into the computer vision of maritime domain awareness. So U.S. Navy, Fourth Fleet, that's one that they came out with. They also came out with the Naval Holding Corporation. They launched an AI-powered cargo security management solution at Panama. So they have this technology that's called the ARCUS technology, and it's able to identify different ships when they come in and out of the U.S. or in and out of any port that they're monitoring, not just the U.S. And so as they've expanded to the Panama Canal, they're deploying this tech, which is AI-driven and can tell not just where the people are going, right, the ships, but also all of that data can be fed back to the government. So they have a few things working for them, right? They got the institutional buying increasing big time since September, early September. But then they also, this is where the risk starts to come in, is that they also are one of potentially the main companies in the World Cup. And this is where things start to get a little bit more, I guess, speculative. Then you look at like things like them announcing that we know that they're in the airports, because we've gone through the airports. I see comments from you guys all the time saying, hey, I just saw it here, I just saw it there, and we've also seen it. So we know that they're legitimately in the airports with their biometric facial scanning tech stuff. But like when it comes to the mega events, this is where it's like maybe they see capitalization on these events, which would be the 2026 FIFA World Cup and the 2028 Olympics that are both coming to America in the next couple of months or years, excuse me. So if they get a piece of that, then we start to see things really surge. Now we know that the movement with the financials are not very favorable on the income statement. We saw that they didn't come in too well. And I see a lot of Redwire comments. We're going to jump right into it, guys, in just a second here. But when it comes to revenue, they haven't seen the surge, and the balance sheet looks great though. They've increased their total assets, starting to look better, and ultimately need that type of runway if they're building out infrastructure, like this very scan tech that we're seeing deployed at airports and everything else. And if they want to be one of the main contractors for the U.S. Department of Homeland Security and this TSA issuance, you could see they're looking for the exact solutions that Big Bear has. AI-driven threat detection, machine learning, biometric ID verification tools. I mean, that's exactly what they do. Reduce reliance on the TSA agents or the manual labor. That's kind of what they do. So if they get a piece of this .gov article here that we saw published a while back, that could also increase revenue. So that's why we're watching them. Now, they have pulled back. Nearest support level, again, is at $7. $7 a share. That's the nearest support, $7.20. Cool. So let's jump into Redwire. Now, did you guys know, Mark, or who else was wanting to check out Redwire? Ned, did you guys know that Big Bear is actually partnered with Redwire? Didn't know that, but learned that a couple months ago. There's a partnership, actually. And so Redwire, if we head over to quick analysis here on Redwire, and I will have to roll here. I'm going to go to the gym in just a minute here. Oh, she's at the gym. So let's take a look at Redwire. So Redwire is up to $9.62. They made a nice run up here to 10. We were looking for this move in this consolidation, starting to see them reverse. We do see them start to reverse. We see them break up above this 200-day moving average, and we're looking at Redwire as a recent breakout, and now looking for them to validate this $9 price point. They just broke out of about $9.30, and part of what Redwire is really focusing on right now is, as they're surging, what was 16% over the last 5 days. So they're really seeing this big surge here. Part of it is really a value gap. If there was anything, it's a value gap. We've seen their balance sheets, total assets up to 1.5 billion. So they have a larger balance sheet right now than they do market cap. Okay, so when that happens, I mean, at least according to the practices of Warren Buffett, and they look at things like PE ratio, they have these metrics, these checklists that they have to go through every time. And one of the things they go through is the market cap smaller than their total assets? Or is the PE ratio at 20? Or is it, there's like these things they look at, and one of the things they look at for market cap is that. So they've seen increasing revenues year over year, up to 300 million in 2024, and on track to surpass that in 2025. So revenues are up 24% year over year, but they have had negative net income. And they did have more liabilities than assets in 2024, and then they cleaned them up. As you can see, they got more runway. So we know they're one of the 14 prime contractors in a $2.6 billion deal with NASA. They're a space company that focuses primarily on the defense tech. So they do satellites, they do aerial drone technology, as well as this company they recently acquired, which is uncrewed aircrafts. And they work in infrastructure in space, and they recently signed some deals. The most recent deal they signed, I believe, was a $25 million deal back in late August. There it is. Award IDIQ contract by NASA, biotechnology, and support on-orbit operations. I don't know if you guys know this, but they're doing drug discovery like on the International Space Station, actually. And so Redwire is a part of that. So I think space tech is in a good spot. We've never seen space tech companies with so much runway, because that's always been something that's chipped away at the uncertainty a lot of times. So like when you see a lot of cash in the space companies, it usually means that we're actually on a good trajectory. Because in the past, I'm telling you, like when we were looking at Rocket Lab at like $3 a share, yes, we took risks and we were buying in. I have a friend that works at Rocket Lab, so that was kind of why I was so introduced to it, even at $3 a share. Or ASTS was another one. But like, if you would have looked at those companies back then, other than the like actual building of the rockets for Rocket Lab or like where they were going with their tech, there was no indication that these companies were going to explode. There was no indication financially. A lot of them looked like, oh, are they gonna make it through the next 2 quarters, you know? But nowadays, at least what we're seeing with like a company like Redwire, I mean, their market cap's still smaller than their total, and it's close now, their total assets, so they have runway. So what does that mean for Redwire? Well, we'd probably look for them to continue some of this market cap build, maybe even see them jump back up into this range around $14 to $18 a share. So we did, I don't know if it was yesterday, I think it was yesterday or the day before, we did a defense, it was a defense stock. I don't know if it was this stock, but we did a Fibonacci, which institutions oftentimes use Fibonacci. You go from the resistance down to $6 a share. So that's the lowest nearest trend point. And then we go from where it is now to where we'd expect it to get to, which we'd be probably seeing these levels of resistance kind of up into this range right here. And it kind of gives us an idea then of entry point. Apparently, like perfect entry according to Fibonacci. And I actually did the Fibonacci incorrectly. Hold on. It's supposed to start from, excuse me, guys. All right. It's supposed to start from down here. Excuse me. There we go. So from the nearest lowest point, $6.60. And so that puts our entry actually for Redwire at just about $10 a share for the golden ratio. So the golden ratio, according to Fibonacci, is at 0.618. So 0.618 is the point at which they would be breaking out into the golden ratio. And then from there, a good trade or a great trade would be up into that purple here, about $12 to $14 a share. So Fibonacci is actually starting to look more like a buy there as well on Redwire. So we're going to watch closely on Redwire as they just broke out above this resistance, and nearest support is at $9 a share, and resistance right now is at $10 a share, but they're actually realistically outside of that $10 resistance they established today. The next level of resistance is a little bit higher than that. It's actually up here around like $13 a share, which is a 38% increase from here. So that's what we're going to watch. Good stuff. Good stuff. Cool. All right, guys. So that's going to do it for Redwire. There's definitely a lot to watch there, but you know, risk on the short term, you do want to watch that $9 range. Long term, I think it's still kind of beaten down and looks pretty good. Cool. All right. So BBAI revenue shrinking though. No, it's still increasing. It's just minimal. Unless, I don't know what you mean. Are you meaning quarter over quarter? Because it does kind of look that way. But if you look annual income statements, you could see that they are increasing their revenue every year. It's just minimal, but they are increasing. So they aren't shrinking revenue. However, in 2025, their revenue projections are lower slightly. Then they're expecting up to 150 million. So they might not come in as high as they were last year, but as of now, up until now, they are still holding strong with the revenue. So we'll see how it goes. But thank you though. It's good to always look at those things. Appreciate it. Angelio. Jose says, just wanted to say we appreciate you, Will. Keep up the good work. Thanks, man. I appreciate you. Wouldn't be here if you weren't. Carmen says, looking enter short-term position on Redwire. Just wondering your thoughts. All right, so we just went over it. Yeah, exit around $14. Yeah, a little more on the aggressive side. I'd say 12 to 13 is probably the nearest target, as we just kind of mapped out there. And Anna would like us to go over NB. So we got one more, and then I got to roll, got to go to the gym. And I appreciate you all, but we're going to go over this one. It's called NB. So let me, I'm going to search it first here. NioCorp. I have not heard of this stock, but let's jump into the financials first so I can get an idea here. And also, there's that analysis on BigBear. They're projecting it to get up there into about $10. But let's pull up this stock NB. All right, market cap 566 million, so $500 million. They've been around since 1987. So far, not really liking what they have here reported, and I gotta probably check and verify their financials, because when I look at them on Google, it appears that they have no revenue. But let's just go double check over on their filings. Let's see here. Quarterly annual reports, last quarter. What do they come in with? Let's see. I haven't gone through a sheet like this in a while. Let's see. Did they actually come in with zero revenue? Let's see. Here we are. Gross revenue 21. Is that 21? I need to run this through. Hold on. I need to run this through like a ChatGPT or something. How is the revenue here? $21 billion total gross. All right. Is that right? 21 billion? That's not right. I think it's 21 million. 21 million. So $21 million, I believe. So revenue, 21 million, net income negative 11. Okay, and their market cap is at 566. That makes sense. Balance sheet looks pretty good. They got more assets than they do liabilities, which is always nice. Not really a red flag there. So I feel comfortable jumping in the chart. Let's see how it looks for Anna here on this mineral company. So they're focusing, and let's just get clear about what they're focusing on as a company. They are in critical mineral supply, designated US government as critical minerals, and they're focusing on those minerals. And then as far as their like partnerships and things like that and news releases, they're going to like they have some public offerings, they're raising money, and they haven't had any like deals that are worth a considerable amount in the last month. Actually, they just got a US Department of Defense award of $10 million from the Pentagon to support establishment of a domestic scandium mine to manufacture supply chain via Elk Creek Critical Minerals Project in southeast Nebraska. All right, so $10 million from the US Department of Defense. So they do have some deals, and that was in the last month or two. And that was 10 million, and they're also raising money. And they have a healthy balance sheet, so that looks pretty good. All right, how are they doing? They faced some manipulation in the past. Seen them get up into $14 a share before. They were just at $1 a share. RSI, MACD, everything looks overbought at the moment. You kind of see that level there. And then the support and resistance, it almost looks like they're getting ready to kind of pull back a little bit. Now it's a small market cap. They could continue up. But just from a technical perspective, they are going to face quite a bit of resistance right here. Kind of see that previous resistance and support, and that's where they're at right now. If they break up and continue above 650, it looks like this is kind of the next level. So I would watch this 650 range, see if they can hold it. And if they can, then look for maybe a shorter term trade. That was a nice reversal there from $1, but realize they're penny stocks. There's a lot of swings there. And then finally here for Anna, you get the full analysis. I want to check out this institutional ownership over here. 14% institutionally owned, or 15%. More increased positions than decreased positions. BlackRock is one of the main owners. They've increased their share. It's actually pretty healthy. If they had like 50% institutional ownership, I would watch out. That could be really manipulative. Right now, it's fairly small though, 14%, 15%. So risk isn't extremely high, even though they have a low market cap. They don't have massive institutional holding, but they would see a ton of sell-offs all at once potentially. It might be more gradual like we saw here last time when they kind of gradually sold off. So that's cool. Awesome, guys. Well, I appreciate you all, and thanks so much for tuning in. We just went over Big Bear. We went over Redwire. We got to go over some top stocks. We went over APLD as well. And yeah, I would watch this one. It's not too bad. I'm going to definitely add it to the list, Anna and B. Appreciate you all. And I know it's late, but I still got to run to the gym here today. I appreciate you. Have a great rest of your day, guys. And if you have any questions on AI, data center, quantum stocks, always leave them in the comment section below. If you'd like to watch us trade them every day at market open, we were just trading some quantum today in a inverse position on IONZ, and we're there every day at market open. It is early in the morning, so you got to get up early. If you want to be there on the East Coast, it's a little bit later. But we have all the targets for the week. Live trading is happening in 11 hours. If you want to see our entries, see our exits, and I will send you a free t-shirts when you join StockMeet. So if you want to grab that free t-shirt, it's the second link in the description below. And I would love to see you there at market open. Appreciate you all. Thanks so much for tuning in. And also some really good insights recently with some investors over in StockMeet. Did you know we got over 25 individuals with a net worth of over $1 million? It's pretty cool. So anyway, if you ever want to surround yourself with them, second link below. And appreciate you all. I'll see you in the next video. Take care.